welcome back everybody, your typical bull here, and today I'm going to teach you everything that you could possibly ever want to know about the Relative Strength Index, or the RSI. But before we get into it, please do remember to like, subscribe, and comment. Your support really helps the channel to grow and is very much appreciated. And if this channel has helped you to become a better trader in any way, please consider clicking the join button and joining the YouTube membership program. You get some pretty cool emojis, you get access to my midweek watch list updates, you get top comments on all my videos, and personal access to my inbox. Or please consider joining me on the Patreon page. So with that being said, let's get right into it. So first off, we're going to go over a little presentation I've created, kind of just go over the basics of everything and how it's what the RSI is and the way it's used. So what is the Relative Strength Index? The Relative Strength Index is a momentum indicator used in technical analysis that measures the magnitude of recent price changes to evaluate overbought or oversold conditions in the price of a stock or other asset. The RSI is displayed as an oscillator, a line graph that moves between two extremes and can have a reading from 0 to 100. The indicator was originally developed by J. Wells Wilder Jr. and introduced in his seminal 1978 book, New Concepts in Technical Trading Systems. Traditional interpretation and usage of the RSI are that values of 70 or above indicate that a security has become overbought or overvalued and may be primed for a trend reversal or a corrective pullback in price. An RSI reading of 30 or below indicates an oversold or undervalued condition. And this definition was taken straight from Investopedia. Alright, so before we do get into the RSI, let's just note that it can remain in overbought or oversold conditions for extended periods of time without the price moving down when it's overbought or up if it's oversold. This indicator is not the end-all be-all, and you should always use this in confluence with other price factors such as volume, support, resistance, your other indicators, your tape reading that we've learned about. How can I use the RSI to take higher probability trades? Now we're going to get to some juicy bits. So the most common use to determine the RSI is when a stock is in overbought or oversold conditions. Let me just blow this up. So a sell signal is generated when the RSI crosses above the 70 line, indicating overbought conditions, and then confirms by a move back below the 70 line. So I am going to go through some slides here that I created, and then we'll go look on some charts and find some examples in real life here. So basically, you see here the RSI is above its 70 line here, and you get a nice little spike down on your candles there. And then again the RSI is oversold here, which I did not mark, and you get a spike down there. And then here you can see the RSI is below 30 and it crosses back above that 30 line and the price is up. This is the most common way to use the RSI as an overbought or oversold indicator. Divergences between the price and the RSI. This is another common signal showing a possible trend reversal. A buy signal is generated in a downtrend when price is making lower lows while the RSI is making higher lows, showing bullish momentum is increasing. A sell signal is generated in an uptrend when price is making higher highs and the RSI is making lower highs. Do note that for this pattern to be valid, the trend line should connect swing highs to swing highs and swing lows to swing lows. It should not be cutting through any existing price action to make these connections. And we'll go over some examples, like I said, once we get through these slides. So here you can see a swing high and a swing high we've connected, and then the same swing high to swing high on the RSI we've connected is making lower highs while the price is making higher highs, and soon after the price moves down. And then same thing here, the RSI is making, or the price here is making lower highs while the RSI is making higher highs, and then soon after the price makes a nice move upwards. Up next we have the RSI trend lines. Oftentimes the RSI can be used as a trend following tool. Trend lines can be drawn on the indicator itself that will closely correlate with price trends. These indicator bounces can be used in conjunction with price to add confirmation to these price movements. If a trend is strong on the price chart while the trend on the RSI appears weak, you should be exercising caution and be careful. So here we can see a pretty standard price trend line and then I've drawn this same trend line almost on the RSI, and you can see that most of these bounces here correlate quite well with your RSI. So you could use that to help you to determine whether a buy would be a good call in your trend continuations. The RSI can be used in trading breaks from ranges. Oftentimes when an RSI is consolidating and then breaks from this range to one direction or the other, the stock price will follow this movement higher or lower in a momentum swing. So here we can kind of see the RSI is in a nice little consolidation pattern, and then it breaks from that, and then the price quickly moves down. Same thing here, nice little consolidation. We break up this time, price moves up. Again here, nice consolidation, price breaks out on the chart and on your RSI, price moves up. Same story here, nice little consolidation, and then you get the breakout. RSI as support and resistance. In this example, we can see the RSI can be used to determine levels of likely price bounces by using it in the same way we draw a standard support and resistance line on a chart, only this time we would draw them on our RSI. So here you can see RSI is a resistance, and then it starts bouncing off of these levels of support. So here you get a small price spike down, but then it breaks through that resistance level on the RSI and then comes down and retests that level, and then price moves higher shortly after. And then same thing here, you can see there's a nice little resistance or support forming on your RSI, and it's tested once, twice. You probably wouldn't take this trade here because you haven't really got that area established yet, but this time here you can take this nice little bounce, and then it looks to be currently bouncing again. Crosses of the center line. A buy signal is generated when the RSI is below the 50 line and crosses back above it, indicating strong bullish momentum, and a sell signal is generated when the RSI is above the 50 line and crosses, that should say below, indicating strong bearish momentum. So basically what that means here is you draw a line straight in the center of the RSI on the 50 mark, and then when price crosses below it, here you can see a red sell signal is generated, price moves down, price crosses above it, you can see buy signals generated. Same thing here, price crosses above, and then here once again is a very kind of a weak signal that you may or may not have taken. Here's another buy signal, and you can kind of see that this is basically strong momentum building here. The RSI will often print patterns similar to those you would see on standard candlestick charts. Most predominantly, though, are going to be your double, triple tops and double and triple bottoms. And it is uncommon, but it can sometimes print like cup and handles or head and shoulders. But personally, I only pay attention to the topping and bottoming patterns because the head and shoulders patterns are generally weak signals on the RSI and are very hard to spot. So here we can see in RSI double bottom, it bounces once here, twice, and then you would buy here on this second bottom, and then of course the price does move up shortly after that. And then here we see an RSI double top. Here's your first top here, and then your second peak here. You get a nice little down move there right to that previous support level. So in conclusion to our little slide here, the RSI is a powerful indicator, but like all indicators, it is lagging. So it's always important to remember to use these in confluence with price action and volume. Nothing is foolproof and will be always correct, and we'll see some of that later when we get into some chart examples. However, learning the nuances can help give you a better edge and help you to take higher probability setups. Do always remember to manage your risk accordingly. Just because an indicator is telling you something is extremely overbought or oversold does not mean that price will follow. The market oftentimes is irrational and has taken down many traders with much more savvy than you and me. This is a game of probabilities, and trading with an edge and proper risk management, you will come out on top in the end. So let's go look at some charts here. So here's some pretty standard stuff. As you can see here, price is overbought, but it's not moving down, right? So let's just go over a couple of tricks here. You can see that we are clearly uptrending here. So generally, you're not going to want to take any short signals in an uptrend, right? But you do get a nice little dip down here to this 43 area and a little spike, and then you see the RSI start building some upwards momentum again in this area. That's probably a good indication that you're pretty safe getting along here, right? You see you're in an uptrend. It's very clear. You get a nice spike down here to this 42 area on your RSI, and then you start trending back up on your RSI. You could jump in here, and of course you would have caught a huge momentum move, and then you can use this kind of as an area, this overbought area kind of as an area to trail your stops to, or consider exiting and booking some profits, right? So here is another example. You start to see a little bit of a bullish divergence here, or a bearish divergence here, and it does end up playing out, right? But you get that higher peak. I'm just going to use this same trend line. You get a higher peak here, and then you get a lower peak here, and you do get a semi-short short move here, but the real move is here on this next one when you get this third kind of move up from this peak to this peak here, this swing high to this swing high, and then on your RSI you see here's another bearish divergence, and then you get a pretty solid move down from there, pretty well right to this old support or little pivot here. Let me just draw a line in there. So you get that move pretty well right down to this old pivot, and it's just stellar. But then note we are still in this uptrend, right? This trend is still very strong. Now we can use our RSI sort of as a oversold signal, right? We get this kind of a bounce off of the 30 line, right? And then we start to trend back up. But our price isn't quite following our trend back up yet. But look, the price is flat. Your RSI is showing momentum increase. This is a good spot to get long. And your risk is not very large here because you get confirmations kind of in this area, and your support level is right here. So if your stop loss is just under that support, you know you've got your RSI trending. You've got a support working in your favor here as well. This is a great place to get long and target maybe these previous high areas, or use your RSI and target this overbought area, right? So we're overbought here, boom, that's pretty well right where it dips out. This could be a good signal to exit your trade when you get up here and get overbought and you start making this bearish momentum on your RSI. Cool, so let's find some more examples here. This looks like a little topping pattern on your RSI, or possibly even a range break here. So that range would probably be between these peaks here and these peaks here, and then you kind of get a little break down from it and a retest here, and then price does move down here, and then once again we get another little trend following RSI thing here. We're showing some more bullish momentum. RSI is trending up, it trends up for several candles, and then we get this little consolidation here. See, it's another range break on your RSI. You've got 1, 2, 3, 4 kind of peaks here, as you can see, and then you break through those peaks on your RSI and start trending upwards. You could jump in there and you make a pretty stellar trade. So here is kind of an example of where an RSI can remain in an overbought territory for a long period of time, right? See, you are overbought here. You don't actually get any kind of real pullback until this area here. So it's always kind of important to wait for these confirmations on your candles and your RSI, right? You don't want to just go short just because something's overbought. Wait for it to turn around and start to come back down. And then when it crosses this line back to the downside, boom, then you jump in short. So you get that kind of like right here, right? You get this nice little bearish pin bar on your chart, and the RSI crosses back down, and you could have, of course, jumped in here at about 14 and got short here until about 12. So here's a pretty long-standing RSI range, price consolidation as well, and you kind of get a little mini break here. But if you notice, your price is flat here, kind of. This is like some real choppy price action, but what's your RSI doing? Your RSI is steady making lower highs, steady making lower highs, steady making lower highs. So as soon as you break down here through this support, the momentum on your RSI is showing very strong bearish momentum. Your price is flat, but it hasn't quite caught up to this bearish momentum yet, right? So as soon as this breaks through, it's pretty high probability that if you go short here with stops probably in this area, kind of far enough away that you're not going to get stopped out on volatility, look at the damn trade you would have made here. This is a stellar move. As soon as you hit oversold here, you could probably scale out or move your stops down. There's no shame. Well, I just want to address that really quick. There's no shame in taking profits here if you were short. Don't be sad if you missed all this crap. It's going to happen. It's fine. That's a great trade. And then kind of here, you come back down, your RSI starts trending up again. You make a higher low here, and then start to trend back up. And then what happens right here? RSI double bottoms. Boom, jump in as soon as that breaks there. Nice little trade there. So I feel like we've kind of covered plenty of examples here. You can kind of see how the RSI is used and how it can help you in your trading. So I do hope that you guys will smash the like button on this video, and I appreciate you watching. And if this video has helped you in any way, please do consider subscribing to the channel. Let me know in the comments below what you think about it, and if you use the RSI currently, or if you've learned a new way to use the RSI today. And with that being said, I think we're going to continue kind of going through some indicators and maybe how to trade some chart patterns for a while. And so be looking forward for those. I appreciate everybody once again, and we will see you all in the next one.